Tesla stock as well as the broader markets are selling off, and you need to know exactly why. Tomorrow is going to be another big potential mover in the markets. A very specific catalyst that is going to move things. On top of that, Elon Musk says the new version of FSD is, quote, mind-blowing. Maybe we will get level 4 or level 5 full self-driving after all by the end of this year, as Elon Musk has previously forecasted less than 1 month ago. And Cathie Woods is still expecting Tesla stock to be $2,000 per share by 2027. Cathie Woods did an interview today discussing latest changes in her portfolio and exactly why she has been a seller of Tesla recently. I think you want to hear all of this information, not to mention Tesla is literally eating the competition's lunch. Volkswagen just cut their guidance because of EV competition. But first, if you want to make more money, if you want to reach financial freedom as quickly as possible, or at the bare minimum, stay up to date with everything going on in the broader markets as well as Tesla specifically every single day, well, hit that subscribe button and let's get straight into it. Elon Musk says full self-driving V12 alpha build is mind-blowing, and he said this in response to a Twitter user, which, as you guys know, is Mars Catalog, says, wow, FSD beta is getting freakishly good, and I'm still on 11.4.4, not 11.4.6 yet. I tested the version 12 alpha build today. It is mind-blowing, said Elon. Last month, Musk said that version 12 would no longer be beta, hinting that it would achieve full autonomy by then. Currently, FSD is in beta mode, meaning it is still being tested and requires active driver supervision. Earlier this month, Musk said at the 2023 World Artificial Intelligence Conference that Tesla is, quote, very close to achieving full self-driving capability. I have been wrong about this prediction in the past, but I feel we are closer to it than we ever have been, said Musk. But with all of these successes, there's going to be your haters. Tesla is being sued in California by owners complaining about phantom braking, alleging Tesla's cars will abruptly brake while in autopilot mode for seemingly no reason at all. In China, thousands of the company's cars are being recalled for the same reason. And in the US, the National Highway Traffic Safety Administration has begun its own investigation of the car's strange alleged braking behaviors. That's not all. The Department of Justice is looking into Tesla's potential criminal liability for at least some of the crashes, both fatal and not related to its autopilot issue. These kind of lawsuits never tend to affect Tesla's stock or many other stocks as well. As you guys know, some big names like 3M getting hit with $10 billion+ lawsuits. That's because it affected a lot of people and was a problem that they actively knew about. I wouldn't expect this to hinder Tesla's stock performance in the slightest bit, but it could. There's always that possibility. Tesla will be opening a state-of-the-art showroom on the tribal grounds of the Mohegan Sun tribe. This is skating the ban on direct sales for autos in Connecticut. Tesla has actually done this many times in the past by putting these showrooms on Indian land. It's not governed the same way by the actual government, so they're allowed to get through with these state banned orders. And believe it or not, I didn't know this, but Tesla is not allowed to sell direct to consumers in Texas, Louisiana, as well as Connecticut, and some other states as well. Texas really stood out to me as a strange one, considering they have their factory in Texas, but there is a lot of tribes down there, and that's where you get the showrooms. Cathie Woods also publicly explained why her fund has been selling Tesla stock. In an interview with Barron's, unfortunately it's not a video, you can listen to the article, it says it'll take 8 minutes, be my guest if you would like to, but I'm just going to read some of the important points. And this question is definitely one of the most important, I think, to all of you guys, to myself as well. Barron's asked Cathie, you were a big buyer of Tesla stock last fall and winter as the shares sold off. Now that Tesla has rebounded, you have been selling. What is the thinking behind your recent sales? Cathie Woods says the main reason for the trade is portfolio management. Tesla's gone up more than 2.5 times in the past 6 months, and some of our other stocks are still near their lows. When Tesla moves above 10% of the portfolio, we would cut it back and redeploy into other stocks that we think aren't well understood. Barron says, yet you maintain a $2,000 price target on the stock. It recently traded for $264. You have bold projections for electric vehicle sales and ride-sharing revenue. Too bold, many skeptics say. Our confidence has increased since Tesla's cutting prices, says Cathie Woods. It is one of the few auto manufacturers that can afford to do that because it is riding down the cost curve of consumer electric batteries. This is going to hurt the other manufacturers whose costs are much higher. Last year, there were 7 million electric vehicles sold globally. By 2027, we expect 60 million to be sold and Tesla to keep its current market share. Barron's asked Cathie Wood, you also have lofty projections for Tesla's robotaxi business, $227 billion in EBITDA, earnings before interest, taxes, depreciation, and amortization by 2027. That's more than Apple's current EBITDA. Why such confidence in the company's robotaxi rollout? Cathie Woods says, quote, we already have proof of concept for autonomous cars. I took a ride in a cruise automation car in December and told it to go to my son's apartment in San Francisco. It took me there and back in about half an hour of riding. Tesla's competitive advantage is the billions of miles of real-world driving data it has compiled, which are used to train models to teach the car how to adjust to rare situations. No one has been able to do this because they don't have anywhere near as much data. We believe Tesla is in the core position to be the autonomous taxi platform in the US, and it will price the service below Uber and Lyft. With new technologies, what causes costs to go down is unit growth. As with EVs, we believe Tesla will pass the cost declines along as it scales. This is probably my favorite question of this entire interview. Barron's asked, is it reasonable to expect that people will feel safe riding in robotaxis in 3 or 4 years? Cathie says, I don't know about you, but I'd prefer to get into a driverless car that I trusted than one with a driver I know nothing about. There are about 45,000 fatalities a year from auto accidents, and 80 to 85% of those are caused by human error. If we take humans out of the situation, there will be many fewer accidents. We already have the data to show this. A full self-driving Tesla has 1 accident every 3.2 million miles, whereas a Tesla with human drivers has 1 every 600,000 miles. The average car has 1 every 500,000 miles. I mean, the proof is there. So obviously there is a market for robotaxis. There's obviously a market for full self-driving. These things, Cathie feels even more confident about today than she felt in the past. And even as we previously went over, Elon Musk says the new version of FSD beta is mind-blowing. He said less than a month ago that we would reach level 4 or level 5 full self-driving by the end of this year. I'm willing to bet, even if it doesn't happen by the end of this year, probably next year. Say Tesla to the moon. Tesla stock is selling off by about 3% today, as well as the broader markets, because we got very bad news today. On one hand, the economic data came in much better than expectations, but your bond auction came in really bad. People did not show up to this bond auction, and it has a lot of people questioning why. Durable goods orders month over month for the month of June came in at 4.7% this morning. You were expecting 1%. Much better than expectations. This is positive. This had a bullish effect to our markets. GDP growth rate quarter over quarter came in at 2.4%. You were expecting 1.8%. This was also very bullish for our markets in the beginning of trading, and that's why the markets were up almost 1% across the board. But it wasn't until 1 p.m. Eastern Standard Time when we got the 7-year bond auction that markets started to sell off. This 7-year bond auction, you were expecting the yield to come in somewhere around 3.8%. The bond yield came in at 4.09%, 29 basis points higher than expectations, more than a rate hike. And there's a lot of potential reasons for this. Maybe it's because investors just don't want to own the bonds right now. That's a possibility. But really what it means is exactly that. People don't want to own the bonds, or at least not the 7-year bond. This is driving up interest rates here today. The 10-year bond is up 16 basis points today, almost breaking out to a new high of this cycle. And this is really strange and a real head scratcher because we just heard from Fed Jerome Powell, and it doesn't sound like we're getting a lot of rate hikes from this point on. Maybe this is the market saying, hey, inflation's going to resurge. That's also a possibility. The 2-year bond yield as well, also almost breaking out to a new high of this cycle, up 11 basis points on the day today. These are massive moves. And justifiably so, the markets are selling off on this, but this might not be the biggest reason why the markets are actually selling off today. It has to do with the Bank of Japan. The Bank of Japan will be meeting tonight as you are sleeping, and what they said today basically got the markets ready for what's going to happen overnight tonight. The BOJ is going to discuss yield curve control tweak to allow rates over 0.5%. Now, if you're confused, the Bank of Japan has been stimulating their economy for the last 8 years now, aggressively. So every time bond yields start to go higher, the Bank of Japan goes out and buys more assets. That's a big reason why their debt looks so high for their GDP. Japan has the highest debt to GDP ratio out of any other country. It's over 200%. You think we have a lot of debt? Well, Japan really has a lot of debt. And this is one of the things that really doesn't look good, right? Well, inflation has started to go higher in Japan, caused partly by a weak yen. With the currency now hovering above 140 to the dollar, the BOJ's policy of holding down interest rates has led to a widening rate differential with the United States and Europe, dragging down the yen. A more flexible version of yield curve control could narrow the gap, easing the downward pressure. So essentially, as well, this could be actually a positive thing for Japan once this does happen, because how foreign currency kind of works, it's interesting. So if Apple sells iPhones to Japan, well, we operate with the US dollar. So that means for an example, Apple sells an iPhone in Japan for 10,000 Chinese yen. That translates to 1,000 US dollars, call it that. Well, if the Japanese yen weakens, the iPhone's still 1,000 US dollars, so people in Japan need more yen to go ahead and buy that iPhone. Well, the conversion ratio looks worse for Apple, right? So as they do this easing of some of this yield curve control, it could actually be a more beneficial thing for Japan, and it could be a little bit worse for the rest of the world. They've kind of been the ones to be stimulating this whole time, as the most of the world, at least the developed world, has been raising rates. So there's a lot of potential implications how this could affect the US, how it could affect Europe, how it could affect Japan even. There's a lot of different outcomes here. You really need to look into this for yourselves, because this could be a big problem. As you're seeing in the broader markets, they're selling off today. Tesla stock is down 3%, S&P is down 0.62%, and the Nasdaq is down roughly equivalent with the S&P 500. This can really change the bond market. And that's one thing that you might have seen with that 7-year bond. As Japan is really the last one to start letting rates go higher, maybe it means rates everywhere will have to go higher. And Japan has been struggling with inflation this entire time. really to even get inflation. Now inflation is starting to actually appear, and it looks like the Japanese population is becoming more willing to pay higher prices. So if Japan's having this inflation problem, maybe that means it's going to be a lot stickier here in America as well as Europe. That's another potential conclusion that I could draw to this latest policy move from the Bank of Japan, as well as that crazy 7-year bond auction. You are also seeing in Tesla's option activity, the positive order value is 33%. You have seen 760 hedge fund and institutional orders today worth $350 million. This is the lowest positive order value that you have seen in a very long time for Tesla. And this, sucks to say, leads me to believe this could be a big downside kind of catalyst for our markets. If you're seeing Tesla seeing this kind of negative positive order value today, you're seeing Tesla as well as the broader market selling off. That's not good, especially heading into tomorrow when we actually hear from the Bank of Japan. This could be a sign of a deeper crash to come. Now, I think it's important to pay attention and to realize Tesla is not going to crash by itself. The numbers were too good on earnings. There's a lot of reasons to own Tesla here. If you think Tesla is going to fall, a lot of people have said to 200 or 220 or even under 200, that means the broader markets are going to crash as well. If you're not willing to bet the broader markets are going to crash, then I wouldn't bet that Tesla crashes here. None of this move that we're seeing, none of this drop today has anything to do with Tesla. And Tesla's actually doing better than a lot of other stocks. So I would say Tesla's holding a little bit of relative strength even over other names. But the bottom line is, if you're not willing to bet the markets are going to crash, then I wouldn't be willing to bet Tesla's going to crash as well. Tesla is literally eating the competition's lunch. Volkswagen cuts sales outlook as EV competition heats up. Volkswagen previously expected around 9.5 million deliveries for this year, and now they're expecting in between 9 million and 9.5 million. Q2 cash flow plunges 71%. What do the Tesla bears have to say about that? Because Tesla looks like it's doing wonders compared to Volkswagen and Volkswagen's earnings that just came out. Tesla is eating their lunch. We are also going to be getting some earnings that could have implications for Tesla, including Enphase, First Solar, and Ford. First Solar and Enphase because of Tesla's energy and storage business, and then Ford obviously for any updates on EVs, as well as the Ford F-150 Lightning. If they announce anything different about pricing or anything of that nature in regards to that truck, that could have some implications for Tesla. Although I wouldn't hold my hat on it, I wouldn't bet the farm on it, Ford could move Tesla stock at least a little bit. Other earnings include Intel, Roku, Dexcom, T-Mobile, United States Steel, KLA, and Skechers. Tomorrow's economic data will also be very important. Coming in at 8:30 in the morning, personal spending month over month is expected to come in at 0.4%. Last month's reading was 0.1%. Personal income month over month for June is expected at 0.5%. Last month's reading was 0.4%. And core PCE month over month is expected to come in at 0.2%. Last month's rating was 0.3%. So you're expecting probably some really good economic data tomorrow as far as personal spending, personal income. PCE is going to be that wild card. If it comes in better than expectations, maybe 0.1%, even 0 or negative, that's going to be very positive for our markets. Anything higher than 0.3 or 0.4% is going to be a negative. So that is going to do it for this video. If you learned something and you want to make more money every single day, you want to better yourselves to reach financial freedom as quickly as possible, or at the very least, stay up to date with everything going on in the broader markets as well as Tesla stock every single day, hit that subscribe button as well as the like button because they're both free 99, and hopefully these videos can help you make money. If you guys also want to take it a step further and come trade with me live in real time every time I make a trade, link down below in the description of this video. I send out alerts every time I do make a trade. It's not like a texting thing. You can come actually conversate and ask questions and try to learn. That's the ultimate goal of that community, and to help you make money. It should be a tool and it should be beneficial to you. That's it. Most importantly, enjoy the rest of your day, and I will see you in the next one.